Hello everyone, welcome to Concept. My name is Dharmendra. Today I am going to talk about fake breakouts, okay, how breakout fails, and we will discuss how I can rectify that. All right. So let's talk about breakout failure. Okay. So let's just say the stock. Okay. Whenever we are saying resistance and support. Okay. So there are common strategies involving resistance and support level, okay, where whenever there is a breakout on the resistance level and whenever there is a breakout on the support level, we take the trade. All right. So this is a general concept, okay. So if resistance breakout happens here, what we do, we take the buy trade. Okay, let's just say I am going with the futures. Okay, so I'll buy the futures over here. Okay, and whenever there is a breakdown on the support level, I will sell the future. Okay, if I'll go with the options, okay, I'll buy here futures, options both. Okay, here I will sell the futures, option also, but here I can sell the call option. Okay, but if I want to buy it, I can buy the put options. Okay, now this is a general strategy. Whenever there is a resistance breakout or support breakdown or any other level breakout or breakdown, we take the trade according to that particular setup. Okay, now many times we have seen there is a failure. Okay, there is a failure breakout. Okay, so how to identify that and how I can rectify that mistake. All right, so I can do it in both, in intraday also, and I can do that in swing trading also. All right, in intraday and in swing trading also. All right, so let's talk about how it can be rectified. All right, so here first, here now I want to show you where we have seen the breakout failure. Okay, so I'll go to analyze, I'll select chart order and trade. Okay, so chart order and trade, here I am saying, here I am looking at HDFC Life. Okay, looking at HDFC Life. Now let me show you. Okay, now here this is, just a minute. Okay, HDFC Life. All right, now here you can see the resistance over here. This is the resistance. Okay, now if I am not able to mark the proper resistance, then I might lose huge amount of money. Okay, so here this is the resistance. Okay, now people usually don't find a way to mark the proper resistance, and they usually take the trade. Okay, now whenever there is a breakout, you should wait for it. You can see there are a lot of spikes over there. Many people have bought the stock on this particular candle. Okay, on this particular they have seen, okay, it is breaking out. Okay, this is a 15-minute chart frame. They might be looking at, okay, this is a breakout. Okay, on the running candle they buy it. Okay, and they face huge losses. All right, so here you can see this is the resistance I am talking about. Now this is a resistance, and now I should go with the support level also. Okay, support. Okay, let me find the supports. Okay, all right. Okay, now here am I going to I am going to find the support. So I am looking at the chart. I can't see a consistent reversal from a particular point on multiple times, so that I can mark the perfect support level. Okay, you can see here it has repulsed from here, then it went down, then it went up to over here, then again you can see over here, then again over here. So in this particular chart I can't find the support level. Okay, so people usually fail over here. Where is the support? Okay, now you can see at this particular level. Okay, here you can see this is the particular level where there is a breakdown over here, and you can see the price again moved up. Okay, now it is is this a perfect support level? No, it is not. You can see over here, okay, there is a consistent movement on the upward side, so it will not be a perfect support, okay, it will not be a perfect support. Now I am going to find the perfect support. If I am going to find the perfect support, then only I will take the trade, okay. Now here you can see this is a support level, okay, this is support level. Why I have chosen this? Because you can see multiple times, 1 2 3 4, okay, multiple times it has respected this particular level, okay. Now what people do, whenever there is a breakdown on this particular level, particular support, they go with the downside downtrend trade, okay. Now you can see there was a big red candle on this particular time, okay, big red candle, you can see it over here, all right. Now on this particular candle you can see there was a huge downside potential, then you can see there is a engulfing candle and the price went upwards. Now many of us, okay, who have sell the future over here, they have made huge losses, okay. Now why this breakdown has failed, why this breakout has failed? There are two reasons, okay, there are two reasons. First of all, data, okay, first of all data, and also the quantities based on the order book data, okay. So here I am talking about two things, data, okay, data and price action also, all right. So here whenever there is a huge candle breakout, there is a huge candle breakout, we should wait for the retest. We should not go blindly on that particular candle and take the trade, okay. Two things we should go for it. First of all data, then also go with the pricing action strategy. Now see, pricing action strategy, it is not necessary that it will act on the same particular time, okay. See, in pricing action technique, we usually go with the technical charts, okay. That means the chart patterns or maybe the candlestick pattern, all right. Go along with that. Now over here I go with the retesting, okay. If it went down, if it retest over here, I will take the trade, okay. Now again on the retest also I will go with the data. Now which data I am talking about? There are two kinds of data I am going to look at it, okay. Two kinds of data, okay. First of all, I will go with the open interest data, okay. Then I will go with the order book data. Both can be utilized for intraday also, for swing trading also, okay. Now let me show you how open interest works and how order book data works, okay. So in open interest you can see, in open interest you will see particular levels, okay. This is a spot. On the upper side you will see call option writers OY, and here you will see put option writers OY, okay. Now what does this data indicates, okay, what does this data indicates? See, the call writers, they are making position on the OTM levels, okay, on the OTM levels, all right, because they have an expectation, they have a perception that this particular stock might not go beyond this level, okay. So what they do, they write call option over that level, okay, and they get the advantage of time decay in that particular option, okay. See, most of the writers, why they go ahead with the writing position? Because see, we have a disadvantage in options, okay, that is time decay, and that becomes the advantage for the option writers, okay. So whenever they write the option, okay, at every point of time decay, that means theta factor is acting upon that particular option, okay. So at every point of time it acts as a time decay. That means if in the morning at 10 AM, let's just say the bank nifty 51,000 call option is quoting at 300 or 350 rupees, okay. Let's just say market went up and again comes down, okay, and also let's just consider the some other scenario also, the market hasn't moved at all, okay. That means it had made the range of 100 points and it was fluctuating in those levels, between those levels. Okay. So will the price of that particular option will remain the same at 2 p.m. or 3 p.m.? Not at all. You will see slight variation. Okay. If it is quoting at 350 in the morning, it might not be quoting at 350 in the second half. It might be like 340, 330. Okay. If that depends on the expiry date. If the expiry is near, if I am taking the weekly expiry is near, like let's just say today is Tuesday, tomorrow is Wednesday, on Wednesday Bank Nifty expiry happens. So let's just say on the Bank Nifty, if it is the expiry date is tomorrow, then you will see vast difference. Okay, vast difference in the pricing. Okay, because time decay will act much faster rate near to the expiry. So that is the advantage for the writers. That is why they write the position, and that is why they are choosing the OTM. See why they are choosing the OTM, because the levels are up on the upper side and the downside. Okay, market might not fluctuate between these big levels. Okay, that 500 points above and 500 points below. Okay, it might not go beyond that. All right, so that is the advantage for them. Okay, but it will act as also as a resistance. Okay, these call writers and put writers position also act as a resistance. So let's just say this is the resistance. Okay, let's just say 51,500. Okay, and I'll see call writers have made the position. Okay, that means let's just say 19 lakhs are there, call writers, and the price is moving. Okay, the future price is moving like this, or spot price. Okay, and it is breaching that particular level. Okay, now the writers who are present there, they will generate a fear or confidence. Okay, any one of them. If they are generating the fear, okay, if they are getting the fear that this Bank Nifty might go beyond this level and I will face huge losses, because as an option writer I have unlimited loss potential and limited profit potential. Okay, so here what they do, if they generate a fear, they will start unwinding their position. Okay, if they start unwinding their position, all right, so from this 19 lakh OI, it will reduce to 18 lakh, 17 lakh, depending upon the number of writers who are exiting their position. Okay, so from 19 lakh it will come down drastically. All right, so that unwinding level, that unwinding percentage indicates that this particular resistance is becoming weak. Okay, now it might not happen at once, because there are lot of you can see on the chart, the market just touches that particular level and it spends more time at that particular level. Okay, so you have the perfect opportunity to watch, to look at open interest. Okay, so if I am going to the chart, okay, if I am going to the chart, let me open the chart. Okay, just a minute. Okay, let me open this chart, just a minute. Yeah, see here you can see this particular level. Okay, you can see this is the level. All right, and you can see they are spending much time over here. Okay, so at this particular point, okay, you can see this is the level. Okay, and 732 or 730. Okay, so if you see the market is spending like more time over here, just look at the levels in the open interest, whether they are unwinding their position or not. Okay, or whether it is becoming strong. If they are unwinding their position, okay, they are reducing their position, you will see whenever the breakout happens, the breakout will become success. Okay. So this is how I am going to identify the fake breakout. Okay. See, whenever you are going to take the trade in the fake breakout, you will face immense losses. Okay. So it is better to go with the data. Okay. So I have explained it to you. All right. Now let's go to the board again. Okay. So here I have shown you how I can identify the breakout. Okay. Now see, if it is moving at once, okay. Now in the chart you have seen that it was moving like this. Okay. So it is better to go with this rather than this. Okay. Why I am saying this? Because you will get ample amount of time. Also you will get risk management opportunity, because whenever it is making a move like this, you will get the stop loss level. Here marking the stop loss level is very difficult. Marking the stop loss level is very difficult. Here you can see, if it is moving like this, I can mark my stop loss over here. So from 732 to 726. Okay, that means I can see 6-7 rupees down. I can mark that particular level. Okay, 1% stop loss of the entire price. Okay, but if it is just moving, if it is breaking and going above and above, then you should not go ahead with that trade. Okay, because marking the stop loss is very difficult at that particular range. Okay, now see, once you are experienced into taking the trade, identifying the fake breakout, you can go ahead with the trade. But if you are a beginner, okay, if you don't know how to do the risk management, then don't go with that particular trade. Now this is about buying. Okay, this is about on the upper side, not buying on the upper side. Same goes with the downside also. Downside also. Okay, so let's just say this is a level 50,500. Okay, and here we have put option writers who have made the levels. Okay, now if put writers are making the position over here, okay, now if it is going down like this, okay, if they generate fear, what they will do, they will unwind their position and the price will go down. Okay, this is how you are going to take a look at it. Okay, price goes down, they will start unwinding their position, that particular support will become weak. Now you can buy the options also and you can sell the futures also. That is how you are going to take the trade. Now this is about open interest. Now let's talk about order book data. Okay, so order book data you will get on the chart. Okay, order book data. Okay, order book data, you will see a particular candle. Okay, whether it is green, okay, or red. So let's just say, let's go with the green. Now you will find buyer and seller quantity. Okay, buyer and seller quantity. Let's just say buyers are more over here. Let's just say buyer are 20,000, seller are 10,000. So it indicates that buyer are more dominant, so price is likely to go up. Okay, if it is red candle, and you can see if this candle happens to be placed at resistance, okay, happens to be generated on the resistance or support level or any other level, then it has more value as compared to in between those levels. Okay, only the importance of this order book data will work at the resistance and the levels and also the zone breakout. Okay, just keep this thing in your mind. Okay, so here if it is green, buyer are more as compared to seller, that means the buyer are dominant, the price is likely to go up. Okay, if I reverse it, it is red, buyers are 10, sellers are more, that means seller are more dominant and the price is likely to go up. Now sometimes it is red candle but the buyers are more, so that is where you are going to identify whether it is a fake breakout or not, because see, at the resistance level, at the support level, red candle appears, but you can see the sellers are less and buyers are more. Okay, so that will give you an idea that this breakdown is failure. You should not go ahead with that trade. Okay, let me show you. Okay, so if I'll open the concept application, all right. So I have shown you earlier. Let me show it again. Just a minute. Okay. Now here, yeah, this one is a level. Here you can see at this particular level, this particular candle, okay, the red candle which I have shown you, it has broken the support level. You can see the buyer initiated quantity is 4400 and sellers are 00. So that means the buyers are more dominant as compared to sellers. So here the buyers are more dominant, so this breakdown will be failure, and you can see this breakdown was a failure. Okay, if I have taken the trade over here, I have faced the huge losses. I might have faced the huge losses. Okay, now always look for the resistance breakout and support breakout. Okay, if you are going ahead with that trade, so I have shown you two ways where to find the order book data. Okay, align with the resistance and support breakout, you will get the intraday trades. Also, if you want to go with the open interest data, align it with the resistance support breakout, you will get the intraday as well as the swing trading setups. Okay, so this is the session about how to identify the fake breakout. I have rectified how to find a way to identify the fake breakout. I hope you like this session. If you have liked this session, please share, like and share. If you have any doubts regarding the concept tool, call on that particular number mentioned above. You will get every details. This is Dharmendra Rajbhar. Thank you very much.